Hello, everybody. This is Elena Garrett with Keller Williams Central 75, and I work in Dallas-Fort Worth area of Texas. And today I will be talking about buying real estate or buying homes with rent to own in Texas, and more specifically in Dallas-Fort Worth. What are the options for buying homes with rent to own? So first of all, very quickly, why do so many people are looking for rent-to-own homes? I receive about maybe 3 or 4 requests every day. People asking if I have any rent-to-own homes that they could look at. So rent-to-owns allows people who cannot immediately qualify for a home mortgage to get into a house that they will eventually buy. The rent-to-own tends to attract certain types of people. For example, many of them are just struggling with obtaining a mortgage loan through a mortgage officer. They already tried and they were told that they do not currently qualify, but they see a house on Zillow that they really, really love, and they want to see if they can do it rent-to-own. Also, there are some people who have pretty good credit score, but they have student debts, and those student debts prevent them from qualifying for a house that would be in a nicer area of town. So maybe they can qualify for a house for $120,000, but it's definitely not the house that they want. They want the house for $300,000. So they're trying to see how they can get around that and maybe use rent-to-own to buy that big house. There are some people who just don't have sufficient savings for down payment, and those are usually people who they usually have a fair amount of debt. They don't necessarily have very high income, but they're very tired of paying rent, and they're looking for any way whatsoever to get out of paying rent and actually own a house for themselves. There are some people who go through some family changes. For example, maybe somebody just finished a divorce or just separated, or maybe they are dating together and they're not quite ready to buy yet together because the title issues will be complex for unmarried couples, but they do like the house and they think if we get into this house now, when we're ready to get married maybe next year, we will already be in the house and it will be much easier to buy it at that time. Well, there are many other issues that sometimes credit-wise, loan-wise, or credit-wise, debt-wise, family-wise, immigration status-wise, that might take 1 to 2, 3 years to resolve. And for those people, it does make sense to look at the rent-to-own instead of just renting. What types of rent-to-owns are available in the market? A lot of people ask me, can you find me a rent-to-own? But very few people ask me, can you find me a specific type of a rent-to-own? Because most people just think of the rent-to-own as just some situation that always the same. We rent and then we own. No, there are different types of rent-to-owns, and depending on your specific situation, one of those rent-to-owns may be more suitable for you than others. For example, many rent-to-owns that are available on the market like on MLS come from individual sellers. That seller, specific seller, has a house, usually one house, maybe 2 houses, that they decided they're no longer going to rent. They are tired of being landlords. So they're going to get out of landlording by doing a rent-to-own. The benefit of tired landlords or exasperated landlords is that usually they're more flexible, they're motivated to find a renter who would do a rent-to-own for them. Therefore, they're likely to be more flexible. For example, you don't have 580, okay, you have 510. He's looking through your bank statements. He's looking through your 1099, trying to see how he can potentially find a way to fit you into his house. They also are more flexible in terms of financing. You can say, I don't have $10,000 for down payment. I have only 7, and he will say, well, 7 will do if you do a larger deposit or whatever. So you can negotiate on terms of financing with an individual seller. The drawback of the individual seller is usually he only has 1, maybe 2, at the most 3 or 4 properties that, and usually they're not available at the same time. His property becomes available, the renter just moved out, he doesn't want to rent it again, he's doing for rent to own, his next property may not become available for another year. So you're kind of stuck with whatever he has to offer, even if the house is not in the school district that you like, not in a location, doesn't have the feature that you want, maybe too small, maybe doesn't have the best updates, but that's the only thing that's available. What you need to be worried about with this individual seller is to find out why he is not willing to own the house anymore. And you need to be very careful, because with those individual sellers, the risk is there that they have more problems that they initially disclose you. For example, they might have liens on the title, liens on the house. They might not have paid their taxes. There might be a tax lien attached to that house. There is possibility that he is not able to keep up with his payments. Maybe he's gambling. Maybe his money has to go to somewhere else. So he takes your rent. He takes the rent from you, but he never actually applies it to his payments on his loan. And then he starts to receive foreclosure notices that you know nothing about. And even though you gave him high monthly payments, you gave him the down payment, high monthly payments, everything you've done was right, silently you find out the house is being foreclosed on and you cannot own it. And you lived in there for 2 years. There's nothing you can do about it in that situation. So with individual sellers, there's flexibility, but with flexibility comes risk. Then there are some websites that you can go online, for example, rent-to-own-in-Addison.com or rent-to-own-in-Fort-Worth.com. Usually you have an investor or a group of investors who have a plan, and they usually have quite a few houses. For example, they can find 5 and 10, and as they grow and develop their business model, they have more and more houses to choose from. But very often those mid-sized investors, they're not necessarily owning the house outright. Very often these mid-sized investors, they have a specific scheme in mind. They find people facing foreclosure, distressed homeowners, and they offer them to take over the payments. It's a complex legal structure. And then they start making payments, and they take the house, and the foreclosures kind of stopped. And then they offer those as a rent to own. Sometimes they might just own the house outright. You never know. You need to be very careful with these online websites to find out. You need to work with a title company and with an experienced real estate agent to find out, do they actually own the house outright? Do they have a mortgage in that house? Who's paying that mortgage, and whose name the mortgage is? Long story short, those online websites that mid-size investors or investor groups, they're kind of a step up from an individual seller because they have more houses to choose from. That's the plus. The drawback is that they have a website with people typing in, different people applying every 10 minutes. So they have a lot less patience for anybody who doesn't fit their guidelines. So even though they can extend some flexibility, it's their decision. They usually don't have a lot of time for it, and usually they're very experienced investors who are who've been landlords for a long time. So it's kind of hard to touch their heart or open their heart with some kind of a sob story about why you really, really, really need to get into the house. The problem that comes with them being such experienced investors is that they're constantly coming up with schemas of how to buy those houses. They need to get to 30 somehow, yet they don't have an unlimited funds. So they're constantly brainstorming about how can they get this house without spending a dime on their own of their own money. And with that comes risk, because sometimes the schemas that they utilize to obtain those houses not necessarily longevity-wise very good, and may come to a screeching halt if something goes wrong. So there is a possibility of foreclosure, possibility of shadow on a title. Shadow on a title means the liens that you don't know about, some kind of disputes. Maybe the seller, the reason that he was in foreclosure is because he was divorcing, and when they took over the house, they didn't resolve his divorce situation. They just took the house, and now you inherited the house with the problem that the initial owner was trying to settle. So there's a lot of legal issue that can come up when those investors try to acquire houses for the least amount of money that they can make, that they can manage. So those are online website investors. Large national programs. There are many large national programs. Well, I'll take it back. There are not many large national programs that offer a rent to own. In fact, there are just a few. In DFW, I know just a couple, maybe. One of them is Home Partners of America, one of the most known ones. Another one is DV Homes. There might be a couple of more that they're popping up, and they pop up and then they sometimes go away. DV Homes, Home Partners have been on the market for a while. Now, those offer the least flexibility. Usually, they have a pretty rigid guideline on what kind of applicant they're looking for. And if you don't fit the requirements even to the slightest, they have no time for you. However, the great thing about those large national programs is, number one, usually they own the house outright. There are no, usually, there are no potentials for the house to be in foreclosure while you're trying to pay rent on it. Number two, with them, you can pick and choose your own home on Zillow, and they will buy that house for you, and then you move into the house and you start to pay rent. So the large national programs, least flexibility, least smallest risk, lesser risk. Online website, mid-sized investors, I must be careful with them. I must say, be careful with them, because they can run some schemas that will put you in a bind. Individual sellers usually don't run schemas, but they may or may not be very upfront about the potential legal issues and potential maintenance issues that they know might jeopardize your plans. With that said, we spent enough time on the types of rent-to-owns. So why don't we go to realistic expectation that you need to set for yourself when you do when you're looking for rent-to-own. A lot of people contact me and say, Elena, can you find us a rent-to-own? And I say, sure, let me see what I can do. How much money do you make? Well, I make about $1,500 per month. And how much are you willing to spend on your housing? Well, $800 is the most that I can do. And maybe not even that. I would like to spend more. That is not a realistic expectation. You're not going to find a rent-to-own for $800 a month. Or, and how many bedrooms do you need? Well, I need 5 bedrooms. And where do you want to live? Or I want to live in Plano. So you want to live in Plano, you want to have 5 bedrooms, you're making $1,500 per month, and you want to spend less than $800. That's not a realistic expectation right there. And also your credit score is in the toilet, and you're in the middle of a divorce, and you only worked for your last place where you started for 2 weeks. That's probably not going to happen. So what are the realistic expectations? Number one, no matter what the advertisement tells you, rent to own is not for people with poor credit. Rent to own is for people with credit that is just short of a credit that they need to get into a normal mortgage through a bank. Why that? That's because rent to own implies that you will need to own very shortly, and usually in Texas is 3 years or less. If your credit is too poor that it takes you 5 years to get to the point where you can actually qualify for traditional loan, then rent to own is not for you, because you will run out of time to qualify to actually buy that house. So the credit score, ideal credit scores for rent to own. If it's less than 500, rent to own may not be the best choice for you if your credit score is less than 500. Ideally, to qualify for the least risky rent to owns with the largest selection of available houses, you want to have 550 or more. If you have less than 550, then those large national programs probably not going to be for you. You would have to go with the mid-sized investors or with individual investors. It's possible, but it becomes increasingly more difficult to find a property the more your credit score is the closer your credit score is to 500. Income and cash flow requirements and documentation. So I get a lot of requests. They say, I want to do rent to own. Sounds good. So what's your income? Well, my income is $5,000 per month. That sounds very good, but what is your cash flow? How much are you spending per month on, everything that you have to spend your non-discretionary spending? Well, I spend about $4,500 or $4,000. Then your discretionary income is like about $1,000, and that is not a lot of money to do a rent to own. Why? Because rent to own, the rent on a rent to own will be more expensive than a regular rent. For some reason, people think that rent to own will be cheaper than the regular rent. Exactly the opposite. Rent to own will be more expensive to rent than a regular rent. You need to keep that in mind. So if you want a $300,000 house because you think that you make $6,000 and you deserve it, big misconception. You're going to be qualified only for $1,000 that you can spend, and even less than that. Also, documentation. A lot of people say, well, I make $10,000, but it's all in cash. Whatever is my business, I trade cars online or whatever. I get everything in cash. So there is no documentation. Do you have a bank statement? Well, my bank statement doesn't show much of anything. Well, how do you do your transactions? Oh, I just get cash and I pay cash. You're probably not going to find a rent to own situation that will trust you on your words that you're making money. You have to have at least some documentation, and I recommend that documentation goes back for at least 1 year. So if currently you have a purely cash business and you think, oh, I'm just going to get rent to own and I'm off to the blue sky. No, you'll probably need to spend some time building up the documentation first before any investor will work with you on your plans. Credit history and percentage of debt. Already addressed percentage of debt. The credit history. Now, rent to own is more forgiving than traditional mortgage, but it is not credit blind. So if your credit score is 500, but you have late payment, what else? 3 abandoned medical bills. People will probably say, hey, if you're not paying those debts, what makes me feel comfortable that you're going to pay every month on my bill? Therefore, even though your credit doesn't need to be 700 or 800, if you have a lot of late payments and disputes and a lot of red ink all over your credit history, those type of credit histories might qualify with an individual investor who doesn't have the a lot of system to his method. He just likes you personally, whatever, you know, you're like likable guy. Okay, so he forgives you your credit history and he just takes you on board that you're going to straighten your credit up. But when it comes to mid-size and large programs, you're not going to pass. Work history needs to be 1 year or better so they can see stability of your income. A lot of people have income that may fluctuate. For example, they are in some kind of sales and they usually make their lawn care, right? So they mow lawns, or they have a tree trimming company. Usually you trim more trees in certain part of the year than you do in another. So that landlord wants to see 1 year of how did your income, maybe you had $2,000 made in 1 month and $18,000 in another. He needs to understand your cash flow. So if you don't have a work history of 1 year, you're going to struggle to find a landlord, even among the individuals who are going to look over the fact that they cannot understand how your finances are going to perform over time. Bad events is what I call bad events, are things like eviction, recent foreclosure, current foreclosure, recent bankruptcy, current bankruptcy. Those things are very bad events because they have both financial and legal implications. Especially evictions. The rent-to-own owners, the owners of those properties, are landlords. So anytime they see eviction, their blood starts to boil. They don't like that at all. So if you just had an eviction and now you think that you're going to get into a house with a rent-to-own, think again. It's better to have a foreclosure than an eviction from their standpoint. It is best to put the eviction in standpoint at least 1 year, maybe even 2 years behind you. This way, you can show that, okay, something bad happened. I had, the family situation and medical situation, but it's been 2 years, and look, I have not had anything, not even a missed payment once. So you might get a more receptive, more positive reception then. Then they need to see that you have some down payment and savings. So going back to somebody who told me, well, how much do you make per month? I make $1,500. How much can you spend per month? I can spend $800. How much do you have in down payment? Well, I have about $500, and it's all I can do for right now. The landlord is looking for you to have some kind of buffer. So especially with COVID right now, lots of things can happen. Whatever your job is, it might be affected by temporary, the entire country goes into shutdown. How are you going to make your money? So your landlord looks for two things. Number one, how much of your own skin can you put in the game? Because if you have no skin, if $500 is all the skin that you're putting in this game, then what's the point for him? He's going to find somebody who has more savings than you. He would make better, he would feel more comfortable going with another applicant. So the down payment, look for at least saving up to 2 to 3 to 5% down payment on a house that you like. Let's just say you like houses in $250 or $300,000 category. Calculate how much 2 to 3% of that total price would be, and look to see, how soon can I save that much money and set it aside in a different bank account. But on top of down payment, they also look at savings. Okay, once you pay them the down payment, are you now, sitting eating ramen noodles? What happens if you don't have income for a couple of months? Will you be able to pay rent? So they're looking to see that you have a little bit of buffer in case some unfortunate event happens. You get sick, your parents get sick, you cannot work for 3 weeks. How are you going to make those rent payments? So you need to show them down payment plus a little bit of savings to get you through the rough spots. Ability to buy in 3 years. So rent to own in Texas, you must buy by the end of 3 years. But how are you going to buy at the end of 3 years? Some people say, well, the landlord is going to lend me the money. Landlord, maybe that's an agreement with a small landlord. So some small landlords, individual landlords, might do that under rare circumstances. It's actually not that easy for them to finance your loan for 30 years because, well, they probably have a mortgage on that house themselves. And if they sell the house to you, the title gets transferred, the bank may object to them, like who's going to hold the remaining of that loan. So most of the rent to owns do not get financed by the seller. At the end of 3 years, you have to obtain a normal FHA or VA or conventional Fannie Mae Freddie Mac loan, which means in 3 years from the moment that you sign the rental paperwork, you better have a pre-approval letter from FHA or VA or Fannie Mae, or your deal is dead. You cannot finance the purchase. You rent it, but you can't own. Also, a lot of people think that, okay, they're going to rent to own and they say, oh, I have this dream house. And the house that they said, I know exactly the house that I want. And it's in the best area of town. And it has 2 stories and it has a pool. And it has a big yard for my kids to play in. And it has lots of, bells and whistles. And I want this kind of appliances and big windows and high ceilings. And so the house that they're describing is about $400,000. How much do you make? Well, I make about $3,000 per month. You're probably not going to get the house that you dream about on a rent to own. What you're going to get in a rent to own is a property that those landlords don't know how to get rid of otherwise. That property does not rent very well, the renters who live in it don't take care of it, might have maintenance issues that they don't know how to solve. They don't know how to dispose of that property very often. So they say, let's do it to rent to own. Somebody will buy it. That's one way. Another way is that the property might be in a good condition, but that is the only property that you have to choose from. Not your preferred style of the house, not your preferred location. You hate the neighborhood. Nevertheless, that's your only choice. So the realistic expectations have to come both from what's expected of you and what's expected of the house that you're going to buy, and also the fair value for your money. The landlord, if he sells you on a rent to own, he's not going to sell you on the same price as he would sell somebody who buys his house on Zillow. Why not? Because you're going to rent for several years and the price of the house will continue to increase. He needs to remember that the house right now might cost $200,000, and in 3 years it might cost to 20 to 30. He doesn't know how much it's going to appreciate, but he's going to err on the larger side, the side that benefits him. For that reason, he's going to charge you for what the house is going to worth in the future, not for what it's worth right now. And you're going to pay rent for what it's worth in the future rather than what it's worth right now. Also, the moment that he opens his house to rent to own, a lot of people start to ask if they can apply. So the competition for rent to owns is very fierce. So he had a lot of applicants to choose from. And of course, he's not hurting for applicants. Why doesn't he increase the price of the house to the most that he can make? He's not there to do rent to own, to do you a favor. He's there to get the maximum amount of money that he can get out of that house. So he's going to sell you a $200,000 house for $250,000, and he will have a lot of applicants who will be begging him to take their money. So don't expect a fair value of the house for the rent that you're going to pay. You're going to overpay through your nose for the rent to own option. The likelihood of approval. A lot of people think that, okay, so I want rent to own. Let's do it. I have $7,000 in my hand. I'm ready. Bring me the house. Well, you haven't gotten approved yet. Oh, what do I need to get approved? Well, you need to collect paperwork. Oh, what do you mean paperwork? I have the money, I have the cash. I don't have no paperwork. I just want the house. Doesn't work that way. You still, just like with preparing to buy a house, you need to prepare your financials in order. You kind of need to align everything in order. You need to collect all the documents. If you haven't filed your taxes last year, you probably need to go file them. So a lot of applicants rush to fill out an application. When they fill it out, the landlord looks at it and he declines it because they are not ready yet for one reason or another. So you can see right now, this is my login portal into one of the larger rent-to-own programs in North Texas. I'm their agent, one of their agents. As you can see, let's just say this is just one screen, but I have, let's just say 8 or 9 applicants on the screen. How many of them are approved for anything? Just 2. And they're not even approved. One of them is conditionally approved, which means that everything looks good so far, but he still owes them some paperwork to support his claims. Another one is just pre-qualified, which means that initially they talked to him and he sounded like he could qualify, but until they see his paperwork, they cannot approve him. But look at the rest of the people. They started their application and they got a request for, last year 1099 or something else like that, and they stopped because they don't have that documentation. They need to go put that documentation together. They need to file their taxes. Others, they just submitted whatever they had and they got declined within like a half a day because it was obvious that they didn't have the credit, they didn't have the cash flow, their credit history had a lot of red flags in it. So the likelihood, some people think that, rent to own is an easy way to get into the home ownership. Nothing further from the truth. Look at those 8 people. For how many of them is it an easy way to get into home ownership? None of them. Each one of them has to sit and scan documents and upload them into some kind of portals and deal with corrections of different issues that they found out in their credit before they can actually move to the next step of being approved to move forward with the application. So don't expect an easy process. Be very realistic about if you don't plan to succeed, then you're planning to fail. If you don't have your documentation in order, you're probably going to get declined. So let's do a case study. The case study is going to be on how different, so a lot of people say, I want to rent to own and I can afford $1,500 per month. This is a very simplistic approach. How much of that money is going to go toward forced savings, toward your down payment? What's the purchase price of the house? How much money do you have to put down? They don't have those answers for me because they never thought about it. So let's think about them together. Let's take a case study here. We have a typical family who wants to do a rent to own. The house that they like is on Zillow for $200,000. The same house could potentially rent for $2,000 under normal circumstances. So without rent to own, just on Zillow, that house is on sale for $200,000 or for rent at $2,000 per month. So these people approach me and say, Elena, can you find us a way that we can rent to own this house? And I say, sure, let's give it a shot. So I bring them 4 potential investors. 2 of them are small investors, individual investors. There is one online website investment company that offers them their own small program. And then there is that larger program like Home Partners of America or Divi Homes. And I say, let's compare your options. So this is where you actually start to see what it takes to understand where you're going to get the best deal for the limited amount of money that you have. Now, these people don't have $1,500, they have up to, let's just say, $3,000 to spend because it's a larger house. So let's look at their options. This is an interesting case study because this is how it actually unfolds in real life. Let's just say I have an individual investor who looked at their application and he likes their application. He said that he has a house for $200,000, not necessarily the one that they chose, but the one that he has. And he is willing to give them this deal. He's going to offer them $230,000 sales price at the time of purchase, let's just say 3 years down the road. He is requiring them to bring 5% down, which means that they need to have $11,500 in their bank account. His rent that he's offering is $2,550 per month. And out of that rent, he's going to put $200 in escrow toward their forced savings or toward their down payment. So that's the first investor. Investor number 2 gives a slightly different offer. He said, I'll sell it to them at $234 in 3 years. So sales price is going to be $234. But I only ask for 3% down, which means that they can now get away with bringing just $7,000 or so worth of cash. But their rent will be $2,700 per month. But I'm going to put $300 into their savings account. So which of those deals is better for them? That depends on what they're looking for. Are they cash trapped and they only have $7,000 total? They cannot come up with 11 in that case. Their down payment dictates that this deal is better for them, but the rent is higher. So there is a trade-off between a smaller down payment and a higher rent, and that's what you're going to see consistently. The higher is your down payment, the lower is your rent. There is also a third offer from one of those online groups that offer rent to own, and they say we will sell it to them at $218 sales price, which is, look, it's almost like $10,000, $15,000 less than some of these other ones offering. But they need to bring $10,000 down payment. Their rent will be just shy of $2,500, but we're going to put nothing toward forced savings. The entire rent amount is going to be kept by the landlord. They have to save their own money for down payment. Is that a good deal for them? Will they manage to save reliably for the down payment? So, but that's the offer. And then this large program, like let's just say Home Partners of America, they said we'll sell it to you for $228,000, and we need only 2% down payment, $5,600, but your rent is almost $3,000 per month. But out of that, your rent is $2,900, but out of the $2,900, your forced savings are going to be $700. So this is a realistic, what you can realistically expect. When somebody tells me I have $1,500 or $2,000 or $3,000 to spend on rent to own, they're only thinking in terms of, just like renters do, because they're renters, their only thought is usually how much do I spend per month. What they need to start looking at is what's the total sales price, how much do they bring down the payment, how much money do they have to bring to the table to close this deal, and whether or not any of that money is going to come back to them. Because when they're ready to buy, these people, this offer, and this offer will have some nice big chunk of money at the end of those 3 years sitting in an escrow account. But this offer is the cheapest of them all. However, at the end of 3 years, it is up to them to have a 10% or so down payment saved up, or else they cannot proceed to ownership. So this is the case study that hopefully will make you start to think about what a rent to own involves and how you should approach your calculations on what do you want out of the deal. Lowest down payment, lowest price, or highest forced savings, so you can be guaranteed that you will save enough money to actually buy the house. So how does the rent to own work? There are 2 stages to rent to own. First stage is to get to the renting part, and the second stage to get to the ownership part. To get to the renting part, usually, so because we have 3 types of investors, I will go through the steps that are required for the most complex of those, the plans that are offered by large national corporations. Those rent-to-own deals that are offered through individual sellers will have fewer steps involved. So let's look at that. Let's look at the steps. So your first step will be initial consultation with the realtor. Some kind of a realtor, you can pick me, call me, and talk to me about your situation. You'll explain to me your plans, why you're looking for rent to own, what's your financial status, what's your legal status, immigration status, and so on. Once we discuss that, I will probably ask you to sign a buyer representation agreement. So at the very least, I know that I'm starting to work on your case. Once you sign the buyer representation agreement, I will then start to look at assessment of your documents. So I will ask you, can you send me your 1099? Can you send me your W-2, the last 3 pay stubs? So I know what I'm going to look at once I start to talk to the investors. And then based on my calculations, I'll say this is your best strategy. Based on what I'm seeing, your best shot is with individual investors or online groups. You're not going to qualify for larger programs, or vice versa. Whatever your financials show me, I'm going to offer you a strategy. Then once we have a strategy nailed down, we're going to go out and look to see who is available to fit your strategy. If it's individual investors, I will utilize my own connections with there's a large number of investors with whom I work, and I go and I find you a potential investor who is willing to consider your application. I already have your financials. I present your financials to the investor, and he decides whether or not is it yes or no. If it's yes, great, we proceed to the next stage. If it's no, he will tell you, well, not enough credit history, not enough, blah, 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 blah. So I get that feedback and I give it back to you and say to try again, we would need to fix those issues. But let's just say that he said, yes, I'm willing to look more carefully into his application, but I need more information about his child support payments. I need more information about, the status of his divorce, etc. So we start to have a back and forth with the investor about the type of documents that they need to solidify in their decision to continue or to abandon the process. Now, they can also, based on the documents that you provide to them, even after the initial pre-qualification, they can still abandon the process. They say, you know what, the more I see of your finances, the less comfortable I feel with the deal. So it is important for me to be with you at this assessment and strategy discussion, because very often I can kind of prepare you for what documents will probably be asked of you, so you're not scrambling to find those documents at the last moment. But let's just say that you brought all of the information that the investor asked you to bring, and he's reviewing it, and he said, you know what, if that guy can show me that he really has $11,000 in down payment, I'll go ahead and approve him. So at this point, it will be on you then to show proof of funds. You would need to take all money from, your savings and your whatever, however many little places that you plan to put them together, or your mom gives you a loan, put them all into one big bank account and say, this is a screenshot of my bank account with a down payment available in there. With that step, your pre-approval will then be completed, and he will say, I'm ready to move forward. So if that's a small or a medium-sized landlord, let's just say has only 1 property, 2 properties, 10 properties, whatever he has to offer you, you can only select out of those homes. If it is a larger programs like Home Partners of America or DV Homes, for example, there are others, then at that time, once you get pre-approval completed, you can now start shopping and say, okay, where in DFW do I want to be? Do I want to be in Irving, or do I want to be in Coppell? Do I want to be in this school district or in that school district? So usually the pre-approval gives you a budget. And I will take DV Homes, for example. They will say you're pre-approved for $1,700 maximum per month in rent, which means that we can only look at those homes that will allow us to stay within the $1,700 budget. So even though you like the $400,000 houses more, you're not approved for them. You're approved for this $150,000 houses. So that's the only thing that we can shop for, unfortunately. but at least you know your budget, and usually there is a large enough selection of homes within your budget, hopefully, that you find something that you like. Once you find a house that you like, assuming it's a big program, for example, DV Homes, they will then continue with inspections because they need to make sure that the house that you choose is actually worth the money that the seller is asking for that house, and also the house is not a limit from a standpoint of maintenance, because you're going to be renting that house for 3 years, and they don't want something that's going to cost them an arm and a leg just to keep the roof from leaking. So they're going to go through their own process, and they're going to certify or approve the house. And if the house is in good shape, everything checks out with title, everything checks out with maintenance, they will move forward and buy the house. Once they buy the house, you're at this stage then, congratulations, you're now a renter, and they will sign the paperwork with you that will allow you to rent the house for up to 3 years, and then you will have to buy. So that is, all of that needs to happen before you set your foot into the house. Okay, congratulations, you moved in, you're unpacking, and you're about to start relaxing and celebrating, right? Not really. You need to understand before you start, of course, celebrate and have fun with your family. You're now this close to obtaining your home ownership dream, but you're not there yet. There's still a lot of work to be done. There is a reason why you could not buy outright. And usually that reason hides in your credit, your cash flow, some kind of bad events that happen that are sitting on your credit report. None of that has gone away just because you moved in and unpacked. Now you have 3 years, up to 3 years, to resolve your issues. So first of all, you need to start looking at how is your rent being spent? How much is going into escrow out of your rent? And how quickly you're growing your savings. Because for you to get a house at the end of 3 years, you will need to have some down payment. And that down payment is usually higher than what you have paid the investor to move in. So my recommendation is within about 6 months after moving in, go ahead and apply with a mortgage lender. Even though you don't think you will be approved yet for a mortgage, that application will allow the mortgage lender to go over your credit report and to point out exactly what on your credit report is going to be the biggest showstopper as far as getting you a loan. So you will have a good to-do list of to-do items from a lender who will say, for me to lend you, you would need to get those off your record somehow, and I will need to see those accounts closed and those accounts closed. So with that to-do list, you now know what to do, and you can start executing that plan. So your steps would be removing negative items. Sometimes it takes a little bit to do. And I can always, so if you need help with finding a lender to talk to get that to-do list, totally ask me. I'll give you a recommendation. Your next challenge will be removing negative items and improving your credit score. And again, if you need to, go ahead and ask me, and I'm going to direct you to people who can help you with the credit cleanup. And then you will start building up to your escrow. So expect to have or plan to have about 10% of the cost of the house. Let's just say that you agreed to buy it for, instead it was initially $200 and you agreed to buy it for $228,000. So expect to have at least 10% of that $228,000, which comes out to $28,000. So you need to build up to $28,000. It doesn't happen overnight. So start looking at how much money is in escrow and how much money I need to be putting into my savings account each month to reach that number. And then once your credit is improved, negative items fell off, you have 10% in your bank account, you don't need to wait for 3 years. At any time during the period of your renting, you can go ahead and say, I am now qualified to get an FHA or VA or conventional loan, and I'm ready to move forward with the purchase. So 3 years is a maximum, but you don't need to wait 3 years. You can buy the next year after you moved in, if you can, fix your credit issues within 1 year. So as soon as you can, go ahead and get that pre-qualification letter from a mortgage lender. And with that pre-qualification letter, you can now go into the contract to purchase with the investor who is currently, owning the house. And then within about a month or so, you're going to close in the house, and your rental payment is going to drop significantly, because instead of paying this huge rental payment that accommodates both rent and your savings, you're going to see a huge reduction, because you're now only paying on your mortgage, and you're not setting aside huge amounts of money for the down payment. So at this point, expect your rental or expect the cost of your housing to drop significantly. But what if after all of this process, something happened for whatever reason? You were planning to live with this person happily ever after, but then you split up, and now you want to go, each one of you wants to go their separate way. Or maybe you lived in this house for a while and you find out that you hate the neighborhood for whatever reason. You are not obligated to buy that house. You sign a paperwork that said you have an option to buy, not that you must buy. So that option is yours to exercise or not. So what happens if you decide not to exercise the buy option? First of all, let's backtrack. At this stage, on the first stage before, when you do pre-approval, you need to understand the terms of your contract, because your success or failure with getting out from that rent-to-own agreement is actually here. You need to understand how things are going to be handled if you decide not to buy, and you need to make sure that those obligations or those rights are spelled out very clearly in your rental agreement, to make sure that when you get to this stage, suddenly you're not locked in an agreement or in a rental agreement that is unfavorable to you. So do not sign any rent-to-own paperwork until you understood how you're going to get out of that deal and how much it's going to cost you to get out of that deal if you decide not to buy. What do I mean by saying how much it's going to cost you? Usually when you do a rent-to-own, there is an option fee. Remember I told you that your rent-to-own is an option to buy. That option is not a free option. That option has many different ways. Some people call it relisting fee, people call it service fee. But the point is, if you decide to get out from the agreement, you're probably going to have the landlord keep the option fee. So if you were putting together, $2,000 or 2% of your total cost of the house into your down payment, you need to find out how much of that 2% will be non-refundable in case you decide to change your mind about the house. That is something that you need to negotiate upfront. The landlord might say, well, I'll keep all of it. Well, negotiate on that. Don't give him all of it. Say, I want the option fee. My total down payment is $5,000, but I want my option fee to be only $2,000. This way I only lose $2,000 if I change my mind later. So talk to your realtor, or find me your realtor. I will make sure to take care of it. But don't overlook in the initial contract the paragraphs that pertain to the option fee. Now, some of them will not say option fee. Some of them will say relisting fee or a service fee. It doesn't matter if it's non-refundable. If you're going to lose it when you take your contract back and decide not to proceed with that, it's still an option fee under one way or another. your escrow funds and security deposits. So you spend 2 years in a house, and then during those 2 years, every month, $700, like a clock, was deposited into your escrow account. Plus, you put a security deposit in the escrow account when you moved in. That money are yours. That money are not the landlord's to keep. Make sure that you understand that, the landlord understands that. Make sure that you're all very clear which funds are landlords and which funds are yours. So when you get out, let's just say I decided not to proceed with the option of buying, you must have your escrow funds and your security funds returned minus an option fee, which is usually non-refundable. Okay, bonus tips. And by the way, if you are still with me, it's a long discussion, but if you're still with me and you like the presentation so far, go ahead and hit like and subscribe. I usually give those long detailed presentations because I feel that these topics are very serious and they deserve serious discussion. So if you like how I'm presenting or what I'm presenting, don't forget to hit like and subscribe so you don't miss the next installment of my, I'm going to make several videos on rent to own, seller financing, all of those options. So make sure that you don't miss any of them. So now I have explained what kind of rent to owns are available to you. I have explained why you would want to choose one over another or not. I kind of mentioned what kind of drawbacks could be associated with each rent to own version. And we went over the process of what happens if you do buy the house and if you don't buy the house. Now, there are a couple of bonus tips that I would like to bring up just to wrap up this conversation. Number one, where do you find a rent to own in DFW? Well, let me make a shameless plug. So a lot of people contact me and say, Elena, I'm thinking about renting to own. Can you find me a house that would be rent to own? Great. That's great. I can definitely help you. If you don't have time to contact me or if for some reason I'm not available, just go to facebook.com and click on Rent to Own Dallas. And you're hopefully going to see something like that. This is a shameless plug. This is my personal page or my professional page on Facebook, one of them. And what I do there is every week, I post several rent to owns that I see available on the market. Some of them might be already gone. Hopefully most of them are still available, but contact me and say, hey, the one that I've seen on your rent to own DFW side, I like that one. Can you tell me more about it? So that's a shameless plug for my own Facebook page. You can contact a realtor, and I would say that hopefully most realtors know how to find rent to owns. Now, what I do is I continuously network with investors who actually do rent to own programs. So even though I am just a realtor, just like everybody else, all realtors are pretty much have access to the same tools. I spend more time and more energy than most realtors to find proactively future rent to own opportunities. So when you come along, I can immediately say, okay, I know exactly the investor who might be able to help him. So you can contact any realtor, or if it is in DFW or within 1.5 hours of Dallas in each direction, you can contact me. I'll be glad to utilize my connections to help you out. Also, you can always type in an online search, rent to own Addison, rent to own Coppell, rent to own Grand Prairie, and see what comes up. Now, be very careful because there are a lot of scams, rent to own scams. Now, I'm going to do a whole different podcast on rent to own scams, but for right now, just be aware, just because something popped up on the Google search, don't go directly to that seller. Contact a realtor first. Ask the realtor contact the seller, because the realtor is much more likely to detect some strange things that are happening with that deal than you would on your own. So if you found something not through a realtor, if you found a rent to own on online search, I beg you to contact the realtor and ask the realtor to help you handle this transaction. Same with Facebook ad. You're scrolling through your friends' pages and you're watching their dogs play with, whatever, and suddenly an ad pops up. You want to rent to own, you're like, oh yeah, that's what I want. You click on it. So be careful with those ads. You don't know who runs that ad. You don't know if you're going to get in a scam situation or not. So for these two options, online search or Facebook ads or Google ads, anything that pops up, please utilize a realtor to pre-screen that transaction for you and to advise you on potential issues with the title issues, legal issues, maintenance issues for that house. Don't blindly walk in and start signing contracts or sending prepayment fees, because you can actually lose thousands. All of your down payment could be lost to a scam. Tip number one. Tip number two. So we talked about why rent to own is a good thing to have, and how to go around getting rent to own to actually work in your favor. Now, let me discuss for a second drawbacks of rent to own. Just because rent to own is available to you doesn't necessarily mean that this is going to be a good deal for you. I touched upon that a little bit in a previous discussion. So what are those drawbacks? This is especially serious for those individual investors that only have one or two properties, or for those investors whom you found through a pop-up ad on Facebook or on Google. Very often the houses that they offer for a rent to own are only offered on a rent to own because they failed to sell. The investor had it on the market for half a year, and any realtor worth his or her salt would be able to tell you right away the house sat on the market for 3 years, nobody would buy it, and now it's a rent to own. What does it tell you? Nobody wanted that house. Why not? You need to investigate what is going on with the house before you jump on the opportunity. Or sometimes the investor knows that the house is not going to pass FHA funding requirements. What does that mean? You don't necessarily need to understand all of the FHA funding requirements. What you need to know is that if the investor thinks that he cannot sell his house profitably to a regular buyer who went to a bank and got a regular FHA loan, then he needs to find another way to sell that house. Why would FHA not want to fund that house? Very often because there's some issues with foundation. Most of the time it's foundation. There might be some issues with termite activities in the walls. So for one reason or another, the FHA finds that this house does not pass the test, or it needs to be appraised at a much lower value than the investor wishes to sell the house for. Therefore, the investor says, heck with traditional buyers, I'm going to put it on a rent to own. And those people usually don't have realtors. They have nobody to advise them. They don't perform a home inspection before they buy. So guess what? They're perfect for my house. And you could be in that category. So how did it would not sell otherwise, or how did it would not pass FHA funding, is something that you want to stay away from. Potential non-refundable upfront fees. So very often they will say, okay, I will do the rent to own, send me $7,000. You send them $7,000 without signing any paperwork. Well, we're going to go over scams a little bit in a different, there's too much to describe to go over as far as scams go. So I'm going to save it for another episode. But remember, if you work with the realtor is going to protect you. But even if you choose not to work with a realtor for whatever reason, do not do any upfront fees. It could be a scam. You could lose your entire savings account. Also, landlord, I already touched upon this in the first part of the discussion. Just because landlord is offering this house to the rent to own does not mean that he fully owns it. He might be in the middle of a very nasty divorce, with his wife who actually owns half of the house. You just never know about it. Again, working with a realtor can help you to save from some of those problems, but many of those problems are hidden. Maybe the house is an HOA and the owner is not paying HOA fees for 2 years, and the HOA has a lien on the house. That house won't be able to sell until the HOA fees are paid up. Maybe they put in a new roof and failed to pay their contractors, and the contractors are in the process of filing a lien. Any of those things are unknown to you, and only a title search would pull those issues up. So for some of those houses, it's not so much structural, it's not the termites, it's the bad title that really is a problem. That's why they cannot sell it on an open market. But they're hoping within 2 years that you're renting, they will be able to fix it. But what if they don't? Then you're locked into a house that you have to pay up thousands of dollars before you can even buy that house from the HOA, pay up the HOA or the taxes or whatever. So you could find yourself unknowingly buying somebody else's problem. Now, there is also overpriced houses and rents. The flipper bought a house that he should not have bought. He spent, you walk in, this rent-to-own is beautiful. It has new floors, new paint, new roof, new everything. What you don't know is that that house is terribly overpriced for the market. And the renter and the owner is actually a flipper. Maybe he tried to flip it, very conservatively, but ran out of his budget and had to overspend. But as of right now, that person or that flipper is over the budget and cannot sell the house for what he put into it. So he puts it on a rent-to-own program to make sure that he gets, he can cover his expenses. That means that you're buying a house that's overpriced to start with, and then you even increase that even further to account for appreciation. So those overpriced houses, you might think it's a great deal because the floors are new. What you don't know is that when it's time to actually buy the house may not appraise. It may not appraise to your bank requirements. And if you don't know what that means, I'll do another broadcast on that a little bit later. Also, sometimes you would pay a rent that's over $1,000 what you would pay for the same rent somewhere else if you were not doing rent to own. And yes, of course, part of that rent hopefully is going toward your down payment into an escrow, but that still means that you may be really, really close to the maximum that you can pull for that rent. And if something goes wrong, you can't afford $3,000 instead of $2,000. It drains your cash too quickly. So you need to understand that you're going to pay over the normal prices and pay a lot more for a rent when you do a rent to own. Also in your contract, make sure that you check who pays for repairs, which repairs, and up to what amount. So for example, in some contracts, you will say that the renter will pay for small repairs up to $7. That's fine. That might be, between you and the landlord. But what if it say the landlord will only pay taxes and insurance? What if the roof falls in the next day after you move in? What if the pipes break? What if the walls crack and start to fall down? What if your AC goes out? Who pays for those repairs? Not only you're paying an overpriced house, plus an overpriced rent, you're actually on the hook for all of those repairs, or you're in a breach of that contract. So make sure that you understand who pays for those repairs, and it's clearly specified in your contract before you sign the contract. Now, that is usually what I see with individual investors and medium-sized investors. For the national programs, you're a little bit more secure. They have too many renters and too many houses to play games with you. So they're just pretty plain vanilla and easy to predict. What you're going to do is you're going to see much higher rent because those national programs are going to really have aggressive deposits into your savings account. So because they need to do those aggressive deposits into your savings account, your rent is going to be higher. Part of it is going to go into the deposits, of course, but at the end of the day, it's still money out of your bank account. Also, they have a lot of red tapes, and if you have a maintenance request, They only have one company that works for them, for example, and that company will take 8 weeks to get back to your leak or whatever. So red tape is kind of the notorious problem with those national programs. And also, because they have so many applicants, they can be very picky about whom they pick and choose for their programs. So getting accepted into their program is a lot more difficult than getting accepted right here. Last but not least, thing that you can keep in mind as you are looking at the rent to own as an option. You need to make sure that you have a feasible path to a loan that comes from a traditional mortgage officer. Even if that seller is telling you that he might be able to fund your loan and you don't need to worry about the funding, I would still get myself in a shape to go with FHA or conventional or VA, because guess what? If that seller is going to fund your loan, you're not going to get 2% or 3% or 4% interest rate. No, you're going to get an interest rate that's, 9%, 10%. So you're going to be paying more for the same house than somebody who applied for FHA or conventional or VA. So make sure that you speak as soon as you move into the house. You speak with a loan officer and find out what would it take for you to get accepted and approved for an FHA or conventional. Even if you have, so for that to happen, for you to have a real feasible path to that loan, you need to have at the very minimum an ITIN. Very minimum. If you don't have an ITIN and you have no way of getting an ITIN, or you don't want to get an ITIN, you're probably not going to be able to fund that house at the end of 3 years. It is best to have social security number, but if you cannot have social security number within that time that you're renting, make sure that you have an ITIN, and then ask me or ask another lender, ask another realtor to find you a lender who will work with ITIN holders. Also make sure that you have not defaulted. So let's just say you moved into the house, you're renting now, but now you have high monthly payment on our house, and you also have high student loans. So you decide not to pay your student loans. Bad idea, bad idea. If you default on your student loans just to pay this high rent, you're not going to be able to secure a loan at the end of 3 years, at least not with FHA or VA. You might be able to do it with conventional, I'm not sure, but definitely not with FHA or VA. Because once you default on federal aid once, they're less likely to give you federal aid again. So there are also a list of people who cannot borrow with FHA or VA, possibly even with conventional. I'm not sure. I would have to bring a lender here to talk about it. But there is a list of people who really misbehaved on some kind of previous assistance that they received, and now they can't actually own a house. Now, if you're on this list, I think it's called CABRS. If you are on this list, you probably know about it, but just be aware that you getting a rent to own does not solve this problem at all. You still need to solve this problem to get to here. Also look at the total rental fees over 3 years. Let's just say that your normal rent, if you were just renting, was $2,000 per month, but you're currently spending $2,900 per month just to do a rent to own, which means that you're spending $900 per month extra. So that's over $9,000 per year extra. Hopefully, some of it is going toward your down payment once you're ready to buy. But if none of it is going toward your down payment, then you are bleeding out $9,000 per year without getting anything really in return. So if you were to save that $9,000 and stayed in a normal rental, you might be able to save for your eventual purchase much faster than if you were in a rent to own. So calculate your total holding fees with rent to own for 3 years and see whether it makes sense for you to go with the rent to own or just continue to rent. Also, so I will repeat, the financing is not guaranteed. Let's just say that when you started the rent to own program, you were at 560. Your FICO score was 560. You're very close to being ready to apply for a FHA loan. And you're thinking, well, within a year, I will be able to apply for an FHA loan. And, you know, God willing, within a year and a half, I will be the full owner. And then something happens, a medical bill. You know, it's COVID. We're all susceptible. You get sick with COVID and a whole bunch of insurance, whole bunch of medical bills drain your account. And you cannot pay for them. You choose not to pay for those medical bills. And suddenly, instead of 560 or 570, you're at 420. Just because you're in a rent to own does not mean that you'll be able to own at the end. The closer you get to the end of that 3-year period, the better you need to be in shape to qualify for a loan. So your financing is not guaranteed. Remember, you will eventually need to sell that house and move up. That's another big consideration that first-time homeowners completely overlook. They say, I just want to get into something. I just want to get into something. I want to own the house so bad. Please, please get me into this house that, you know, crooked and leaning in one side and located right next to a dumpster. And there's a shooting nearby every day. Okay, so you achieved your goal of moving into the house. But then 5 years down the road, when you have 3 babies and you need a bigger house, you silently will realize that nobody wants to buy your house. How are you going to grow into a bigger and better house if the house that you initially bought is a lemon? You cannot start with a lemon and end up with a lemonade, probably not. You need to start with something that will easily sell later if you have to. So just because somebody offers you a rent-to-own opportunity, do not assume that you are going to live in that house forever. Look at that house as if you were a buyer who wanted to buy it outright and they had all the money in the world. Would you want to buy that house? Maybe not. And if not, then probably this is not a good house to invest in. Even if you rent to own, you're still investing in that house. That's a good investment. And then, unfortunately, not all investors with whom you're going to be working with are honest. And I have to break it to you, the world is full of dishonest investors and dishonest sellers. What they might do is they might write your contract in such a way that they can trip you up and make you fail and say that you breached your contract. First of all, to solve that problem, have an attorney look over the contract before you sign it and explain all provisions of that contract to you. You're going to fight on an attorney, but you can save yourself a lot more in trouble later on if there is a dishonest seller. So first of all, understand what traps are set for you in a contract. Number 2, watch out for the seller's behavior, because if they continue to nitpick on you all the time, it is possible that they're trying to set you up for a failure where they can take your money, take your non-refundable option fee, take your extra payment that you've been making all that month, all that time, and then tell you that you're in a breach of contract and you need to move out, and they will find the next victim and the next victim, so they can do the rent to own multiple times on the same house. So just watch out for the potential of dishonest sellers. Well, this has been a very long discussion, so I'm not going to occupy any more of your time. I wanted to say that I have a few more topics that I plan to cover, hopefully within the next few weeks. One of them will be, is rent to own, is that the best option for you? Where I'm going to go over some potential financial scenarios and say, if this is your credit score and this is how much you have in a bank account, is rent to own the best option for you, or can you do better? So I'm going to have that discussion. Then I'm going to upload the video that says what to do if you've been rejected for rent to own. So you applied for rent to own, you've been rejected, but you still want to try to own the house. I'm going to discuss what your options are at that time. I'm going to have a podcast with an attorney about potential legal issues that could pop up in association with rent to own agreements. And then I'm going to potentially, hopefully, gather some data on scams and horror stories about rent to own, because if you know how other people got themselves into bad situations, hopefully you will know what to be on the lookout for. With that said, this is the end of this podcast today. Please contact me with any questions about rent to own in North Texas. I don't know anything about Houston. I don't know anything about Austin. North Texas, rent to own. I have my own Facebook page. It says rent-to-own-dallas.com, rent-to-own-dallas. And here's my phone number and my email address. Feel free to contact me. Hit like, hit subscribe so you don't miss those important topics. If you're planning to do rent to own, you better know what you're getting yourself into before you sign the paperwork. Thank you so much for your attention, guys. Enjoy your day, and I'll see you at the next broadcast.